All right, listen up. Oracle, yeah, that old school tech giant, just dropped a bombshell, and their stock is absolutely ripping. We're talking about shares hitting all-time highs, climbing like a rocket ship, and people are pumped. If you weren't paying attention, you are now. Here's the scoop. Oracle just scored a massive cloud deal. Their big boss, Safra Catz, spilled the beans. This isn't just some small contract. It's expected to haul in over $30 billion in cold, hard cash every single year. And get this, that cash flow starts rolling in from fiscal year 2028. That's a few years out, sure, but imagine securing that kind of future money. It's like hitting the jackpot that keeps on paying. Now, this isn't just one huge deal. Oracle has been signing multiple large cloud service agreements. That means they're not putting all their eggs in one basket. They're spreading their bets and winning big across the board. Their multi-cloud database business, which is basically them managing your super important data across different internet computer networks, is growing like crazy. It's been exploding at over 100% growth, and they expect that triple-digit growth to keep rolling through their next fiscal year. That's insane. It tells you that businesses everywhere are screaming for what Oracle's selling. Why is this happening now? Artificial intelligence, baby! Everyone and their dog wants a piece of AI. And to run those fancy, brainy computer models, you need serious computing power. That's where Oracle steps in. They've become the go-to place for many of the top AI companies out there. Think about it. 4 out of 5 of the major AI language model makers are using Oracle's data centers. That's not a coincidence. That's pure muscle. They're not just working with nobodies either. Oracle has formed some seriously powerful alliances. We're talking partnerships with the big dogs like Nvidia, OpenAI, and Microsoft Azure. They're building out these super fast, powerful computer setups specifically designed for training and running huge AI models. They've even got systems that support advanced AI models using Nvidia's top-tier chips. Microsoft is expanding their cloud work with Oracle because the demand for AI services is just off the charts. It's like Oracle is building the highways for the AI revolution, and everyone needs to drive on their roads. Wall Street analysts, who are usually a tough crowd, are starting to sing a different tune. A big investment firm, Stifel, just changed their rating on Oracle stock from hold to buy. That's a huge vote of confidence. They even jacked up their price target on the stock, pushing it from $180 all the way up to $250. That's a roughly 40% jump in their expectation for where the stock is headed. Other big names like UBS and Guggenheim are also targeting 250. Deutsche Bank and Westpark Capital also raised their targets, with Barclays maintaining an overweight rating and a price target of 221. This means the smart money is seeing the massive potential here. Stifel's analyst said that Oracle's consistent cloud growth and their smart handling of expenses are going to drive up their profits even faster in the next few years. They noted that even though Oracle is spending big bucks to build out more of its internet computer infrastructure, the company's management is super good at keeping costs under control. For instance, their employee count barely went up by only about 2%, but their revenue kept climbing, growing roughly 8% in the last fiscal year. Their total operating expenses expanded about 5%. This tells you they're being smart about where they put their money, focusing on expanding their tech, not just hiring more people for the sake of it. Oracle's stock performance has been absolutely wild. This company, which has been around for nearly 50 years, has fundamentally changed itself. They used to be known mostly for their database software, kind of old school stuff, but now they're a serious player in the cloud game, standing tall against giants like Amazon, Microsoft, and Google. This transformation has paid off big time for shareholders. The stock is up roughly 32% this year alone. Over the last year, investors have seen about a 60% return. And if you were smart enough to hold this stock for 5 years, you're looking at a jaw-dropping 306% gain. This isn't just a flash in the pan, it's a track record of incredible success. Oracle stock had its best year since 1999 last year, and they've had their best week since 2001 just recently. That's how much momentum they've built. The stock rallied roughly 40% in June alone. Currently, Oracle stock is trading around $220, and the company's total value is sitting about $618 billion. While some might say the stock price is high compared to its earnings right now, with its stock price at roughly 51 times earnings, which is near its 5-year high, the sheer volume of new deals and the explosive growth in their multi-cloud business tells a powerful story. They are securing huge long-term contracts, showing that businesses trust them with critical operations. Remember, this isn't just about tech companies. Oracle is getting into everything. They even secured a huge $10 billion multi-year deal with the U.S. Department of Defense for cloud capabilities. They're also expanding into healthcare with their Cerner acquisition, which was worth about $28 billion, getting a foothold in AI-driven medical data and electronic health record modernization. They're making sure their systems meet tough government standards for classified AI work, which opens up even more doors. Larry Ellison, the co-founder and tech wizard at Oracle, has a bold vision. He wants Oracle to be #1 in cloud databases, cloud applications, and building data centers. He's pushing for flexible multi-cloud systems so businesses can use Oracle's tech even if they're using Amazon, Microsoft, or Google's cloud. This flexibility is a big draw for massive organizations that need stability and security. Oracle's new AI-optimized database even makes sure AI models can access all the data they need while keeping it private. They're aggressively building out mini data centers to outpace their rivals. This isn't just hype, it's a company with a clear strategy, massive market opportunities, and the ability to land multi-billion-dollar contracts. Oracle is on the move, and they're positioning themselves to be a dominant force in the future of enterprise computing. The coming years could completely redefine what Oracle means in the tech world. Their cloud gross margins are holding steady at roughly 75%. Plus, their customer churn in their infrastructure and Fusion Cloud remains super low, under 5%. Oracle's approach of bundling infrastructure with key software applications like their AI-enhanced Fusion ERP and NetSuite helps them lock in customers by increasing how tough it is to switch away. Recent surveys even show that roughly 74% of big company tech bosses plan to increase their Oracle AI workload share in the next fiscal year. Oracle's remaining performance obligations, which is basically future revenue they've already locked in through contracts, jumped roughly 41% over the last year to about $138 billion. This shows strong demand for their computing power, especially for AI workloads, and for companies running Oracle databases on other cloud services like Amazon AWS, Microsoft Azure, and Google Cloud. With orders coming in faster than they can supply, Oracle plans to hike its spending on building out its tech infrastructure by about 20%, hitting roughly $25 billion in the next fiscal year. They also plan to double their multi-cloud data center count to 47 in the next year. So if you're looking for a stock that's not just riding the AI wave, but also building the infrastructure it needs, Oracle might be one to watch. All right, that's the lowdown for today. If you found this useful, hit that like button. Don't forget to subscribe to the channel for more straight talk on the market. And definitely ring that notification bell so you don't miss out on the next big news. See ya!